Hello guys, welcome back to another video at the Capital Traders Group. Now in this video, I'm going to be in essence showing you guys how I enter and exit the market, okay, like a professional. Now I'll be, the tips and tricks I'll be showing you guys is something I also teach to my students in particular. So I want you guys to pay attention to exactly what I'm going to be showing you guys and make sure you guys keep a note, because I know if you implement this into your own trading the right way, it will vastly increase your win rate, okay? Now, before we get right into it, please do leave a like and subscribe as it does help the channel grow. But without further ado, let's go. I'll be showing you guys two in particular examples. The first is going to be continuation and the second is going to be a reversal sort of trade that I look for in terms of how I look to enter the market. Now, I am personally a swing trader, so that means I look on high time frames. That means I start from anywhere from the monthly, the weekly to the daily, and then when I scope down for entries, I usually scope down to the 4 hour, 1 hour, and then a 15-minute. Okay, sometimes even lower, but that's when I'm scoping down for entry. So on the first example, in essence, I'm going to be showing you guys a simple trading model that I use, and it's all based around liquidity, right? Forms of liquidity and structure. Okay, so again, this is something I show my members as well, in particular teach them how to enter and exit the market in this particular way. So say we have a bearish trend. Okay, we're going to the downside. We have a lower low, right? A lower low, and then price goes down to make a lower low, right? And then this would be our lower high. Okay, then what the market in essence will look to do is come back above this high, right? Take out this previous high, which is again a form of liquidity. Okay, this is all different forms of liquidity. All right, a high, a low, they're all different forms of liquidity. In essence, what you see is price comes back up, takes out any previous sellers from this region, traps in buyers who think, okay, wait, hold on, structure is changing, and then they will likely think price is going to push up higher. Then what happens is price trades back below this level. Then you look for lower time frame confirmations to trade price back down to the next previous to make another low a low. Okay, so another lower low. But in essence, this is the trading model I use for entries, and this will vastly help increase your win rate when it comes to the market, because in essence, this is what it does. It hunts liquidity, traps in, takes out all previous sellers, hunts their stop losses, and then traps in buyers to then push price down. Now, you don't blindly want to enter just after you see that push up. You wait for price to come back down, deviate below, and then you wait for a momentum shift to then show you that another shift in structure. But I'm going to show you an example of this that I used on BTC in particular. But in essence, this is a continuation trade because we are still pushing down heavily bearish on this. Okay, so I'm going to show you an example of this on BTC. Again, this is a trade that was taken with the members. But in essence, I'm going to show you guys a higher time frame narrative first. Okay, so in essence, what we have is, let me just move this slightly to the left. So what we have right now, right, is on the high time frame. Let me go on the weekly quick. Right, on the weekly, right, what we had is a clean equal lows. Right, again, everything that I trade off is based off liquidity. So we have these clean equal lows. What does price do? It gives us this deviation below, clears out that liquidity. Okay, right, demand. Now again, like I said, not all forms of liquidity is this is usually this obvious. Okay, it's not always going to be the double top like something like this, right? It's not always going to be a double top and then right, you have the liquidity run and then you have the push to the downside. It's not always that simple, but what you need to understand, it's sometimes it's something like this, right? You have a clear high, price just comes above, clears that high, and then makes this move down. Okay, and that's the model in essence I'm going to be using now. So in essence, this is where how I took the 16k buys on BTC. Again, this was shared on our Instagram as well with members. I got in margin longs after this liquidity was raided, and then we saw that impulse to the upside. So if I go on the daily now, what you clearly are able to see on the daily time frame is we have clean liquidity above as well. If I just highlight it like this, right, we have a clean form of liquidity above. Let's make it a little bit easier to see. Right, we have clean liquidity above that I'm looking to target. Okay, I'm looking to target that. Now again, like I said, because price is bullish now, we've cleaned that liquidity to the left. Okay, this is the accumulation zone, and then we had the impulse to the upside, and then we left all this liquidity pocket here. So I'm still bullish on BTC to come up, right? But in essence, what I was waiting for is price to give us some sort of raid on the lower time frame. So let me scroll down to the 6 hours, right? And price did that, right? We had a let's highlight this. We had a higher high, a higher low, a higher high, and then what does price do? It comes down and it takes out this low, right? It takes out this low, and then it comes down and takes down this low. Okay, so now naturally people start becoming a bit more fearful and start thinking, hold on, price is looking to shift in structure and start pushing to the downside, right? Wrong, because on the high time frames we are still bullish, right? Because only internal structure has shifted. Okay, we still have that big impulse and we have intent for price to come up higher because of those clean liquidity. So like I said, what does price do? It comes back and it clears some form of liquidity, which would be this higher low, right, before we see the higher highs being made. So in essence, the way, again, like you would trade this, you would wait for price to give some sort of bullish reaction, right, trade above this region to then push it up higher. Okay, that's the only way you would look to enter. You'd look to enter after structure breaks here, and then you put a stop loss below the previous low to then trade it above high. Okay, so in this scenario, again, this was another trade that was shared with members, which I did share on my Instagram. Feel free to check that out. Link will be in the description down below. This will be the zone. So let me scroll down to the 1 hour. Okay, again, right, this is the main zone. We've taken care of that previous low, right? We've liquefied that low. Now again, what I'm looking for is the price to give some sort of push down, right? Take out this low and then give some sort of bullish reaction. Then I want to wait for a retest and then look to enter based off that market structure shift. Okay, so once this high gets taken, then I'll look to enter here and put stops below the previous low. So let's see how price plays now. Okay, we've come down lower. One sec. We've come down lower now. Let's see how price reacts. Okay, now we're consolidating. Okay, see, now we've given that clean high. Now I'd want to wait to see, because look, now we've given that impulse move to the upside. Okay, now we're seeing some sort of retest occur. Now I want to see price come above this region and then enter only once this high gets taken. Okay, because remember on the high time frame we've already liquefied that zone. So this is where I'll be waiting for price to see what it does. Right, we're trading back above, which is a good sign, and there we are. I'd look to enter as soon as this high gets taken, and then stops will be below this previous low. Okay, and then on my high time frame, again, like I said, let's go on the 12 hours. My high time frame target is the liquidity above here. Okay, and look, as you can see, it offers a nice 1 to 4 RR. Let's see how price plays. Let me just get rid of all this on the lower time frame. Okay, let's see what price does. And there we go. Okay, price pushes right back above that zone, right? Deviates the low, which let me just highlight here, right? Deviates that low. Okay, liquefies that. On the lower time frame, we see that shift in structure, right? And then we see that push up, right? This is what we refer to as inducement. The low gets taken, and then we see that real impulse push up. But again, on the high time frames, price is still very bullish. Like I said, okay, this only works when you pay attention to the higher time frame narrative. Okay, and this is something I see a lot of newer traders do. They get lost in the lower time frames. Okay, that's why you should always be paying attention to your dailies, your weekly structure zones. Okay, so like I said, we deviated the low and then price pushed up to the upside. All right, and that's a clean continuation trade for price to now. So for example, if I left it running, it'd be up at 1.7 now. But again, my target was the liquidity. Okay, that's the safest zone for your TP, and that's where I would recommend. Okay, because over a longer period of time, that's how you'd want to trade this model in particular. But entering after these raids of liquidity and after these deviations, only only after you see those market structure shifts on the lower time frame will help you increase your winning rate vastly. Okay, it will give you much more higher probability setups and allow you to understand how liquidity is formed and taken in the market, all right, and where volume is usually derived from. All right, so that's BTC, and that is the continuation example. Let's move on to example number 2. Right now, this is an example of a trade that was taken on Euro USD, again shared with members. And I'm gonna exactly break down how and why I took this trade. So on the high time frame, there was this order block I was looking at. Okay, again, I usually look on the daily time frame when I am trading, to build my bias. It helps me understand where structure is. But in essence, we came into this distributive order block, right, where this liquidity was formed. The price came up, and in essence gave us a bearish impulse, right? It didn't break structure to the low exactly. It didn't break external structure, but it did break internal structure, at least on the higher time frames. Okay, so what I was initially looking for, I like this order block in particular, right? It's a valid supply zone, and in essence, what I was looking for is price to come back into this region to push back down lower. Now, what I was initially anticipating, I wasn't anticipating a full-on reversal, but I do understand that price will very likely give a sort of bearish impulse from this region. Okay, even if it was small, it still offer a good, a good 100 200 um, pip setup, right? Which is, even for a swing trader, is good enough for me. Okay, so in essence, this is how I look for reversal trades. Okay, now let me give you the theory first. Okay, so in essence, this is what I would look for when it comes to reversal trade. So say this is a bullish structure trend, right? We have the higher high, higher low, higher high, higher low. Again, very simple. Once I see prices come into a prominent zone on the higher time frames, I wait for previous high to get taken, and then I wait for a structure break, right, on the low time frames, and then wait for price to come back into a prominent zone to then swing it back down. Okay, again, this is usually most valid on the higher time frames. Okay, it's very important that you understand that you can't trade this model without the higher time frame narrative, because if you blindly trade this on the lower time frame, you're going to get stopped down. Okay, it's going to happen a lot. So that's why I only like to trade this model using the high time frame narrative, as it'll help you scope down and narrow where the most high probable volume based move will come from. Okay, and again, if you build confluences along with time as well, it will help you narrow a much more profitable trading strategy for yourself. Okay, so that in essence is the model, but again, it's the same sort of it's the same sort of liquidity based move. We see the high get taken, then we see the low get taken, and then we wait for momentum to slowly shift and retrace to then expect a volume based push to the downside to continue the reversal move. Okay, but in essence, that's what you want to be looking for. You want to be waiting for price to create a high and then take that high. Okay, but in essence, look, this is what I was looking for. Okay, so price came down, we didn't take the lows, but we gave a nice push down, and we took out all this internal structure to the left. Okay, so now let me scope down to the lower time frames. Again, when I like to look for entries, I like to scope down to the 4-hour, the 1-hour, and the 15-minute, and sometimes lower. So this is the zone I liked for a potential reversal. Okay, again, what do we see here? Right, we have clear high highs, high lows, high lows, high highs, high lows, higher highs, and then we have a big impulsive move to the upside to a higher high. Now, any retail trader, any normal trader will be looking at this thinking, hold on, price gonna come back down, and then we can look it to long it back up. Okay, naturally so, because we are in a bullish trend, right? You want to trade with the trend. But in essence, when I saw this, I realized, hold on, this looks more of like a retracement, and that impulse move gives me more of an overextended push. Okay, so price is likely going to give some sort of larger retracement. So I scope down the lower time frame, and again, because the high time frame narrative, I understand that we're at a prominent reversal zone on the high time frame. So what do? Again, we're in the uptrend already. Okay, we're in the uptrend already. So what did I do? Okay, I was patient. I marked out the high, and I waited for price to give one sec. I waited for price to at least, we want to wait for price to at least come back above this zone, and then give us some sort of rejection to then look for retracement to trade price back down. Okay, that's in essence the setup we want to be looking for. Okay, to trade this model. So again, let's be patient. Let's go up down on 5-minute, and let's see what price does. right? The high is left intact for now. We wait. There we go. The high is now taken. Okay, now we want to wait for a deviation back below, because again, this is not valid unless we start trading back below. Okay, because you can't blindly just enter after this high is taken. Sorry, after this high is taken, as you won't be trading this model the right way. So let's see what price does. And as you can see, we see that impulsive move to the downside, right? Now again, let me scroll up to the 15-minute. Okay, one sec. Okay, so now we sort of see this movement now. Now what I want to be looking for is a retracement on the lower time frames. Okay, so a potential push into this region above, right? This is the main order block I like, mainly because I'm going to explain why in a second. Okay, mainly because this high is already formed above it, and I think we're going to take out this high as well. So let me go on the 5-minute. Okay, like I said, once the deviation occurs, you want to wait for some short, lower time frame retracements. Okay, you already have a high here that's occurred, so you want to wait for price to now retrace back above this region to then have a deviation below, and then look for entries for price to come back down. Okay, very simple, but again, you want to wait for another high get induced in essence. Right, again, look, liquidity is very easily forming. What happens? Now we have that clean push up. Now I want to wait for price to trade back below, and that will be my entry trigger to then price push for price to push down. Again, I'll only enter once if price deviates below this region, because look, that liquidity is being built up. Highs, all those stop losses here is in essence collected, and then you want to wait for that push down now. Okay, so let's see what price does. There we go. Okay, pushes down, comes back to retrace. Okay, now that's the clean entry. Okay, now so it depends on how you want to enter it. So intraday wise, my SL would be above this previous high. For swing, my SL would be above this high, right? Whichever way you want to trade it, intraday or swing, right? It's still valid. Okay, and again, my first target. Let's go on the 1 hour. Let's do a 45-minute. Right, now my first target will be at this zone, mainly because this is where the imbalance zone is, imbalance fill is, and then second would be slightly below. Okay, again, depending on how you trade it, for intraday wise or not, it still offers a good RR, right? While it's 1 to 4, or here it's 1 to 8. Let's see what price does. And as you can see, price pushes and gives us a nice impulse move to a max about 1 to 10 to potentially even 1 to 11, most likely, right? Almost 1 to 11 peak, right? But as you can see, the model works out very well. You wait for that push up at high time frame reversal zone, takes out the previous high, deviates below. You wait for a retracement, and then you see the same thing happen again on the low time frame, because remember, price is fractal, right? It repeats itself even on the lower time frames. And then what you see, you have the same sort of scenario. You have highs being built, push up, collect all that liquidity, deviation below, retracement, and then push down. Okay, so this is what you refer to as a very nice high probable setup. But yeah, so those are the two examples. Okay, hope you guys seek value from this, and again, please guys, make notes on this, because this will vastly help you guys have good entries and exits in the market. You in essence want to be waiting for those highs and lows to be swept at major reversal zones, or pivotal or order blocks, right, to look for before you even look for entries, because that will help you find very, very high RR plays, and help you position yourself in actually winning trades. Okay, but with all that said and done, I hope you guys enjoyed this video. If you did seek value, please do like and subscribe. Make sure to join the Telegram, our free Telegram group. Link will be in the description down below. I do share a lot of free setups from time to time. And with all that said and done, I'll see you guys on the next one. Bye bye.